What is going on, YouTube Nation? This is RYLD. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Do you guys have 3 real estate investment trusts that you want me to do a review on? 2 of them are very high yield real estate investment trusts that many investors like. One of them is an excellent dividend growth stock. And again, we are almost at 10,000 subscribers. So make sure you hit that notification bell after you subscribe and smash that like button. Let's check these stocks out right now. Now, here's a very popular high-yield real estate investment trust, Starwood Property Trust. It's sitting at $23.63 right now. Dividend yield 8.13%, PE ratio 9.72, average volume 1.78 million, market cap 7.31 billion US dollars. Its year range was 1969 to 2636. State range was 2356 to 2390, and its previous close was 2391. So let's check these guys out. So Starwood Capital is a 30-year-old private investment firm with a primary focus on global real estate. Assets under management are over 120 billion, 4,000 employees and 16 offices worldwide. So another thing is extensive public markets expertise, having guided IPOs for multiple lending companies. So right here, just here's some information. So since founding Starwood Capital during the depths and savings of loan crisis with the purchase of non-performing loans and real estate assets from the Resolution Trust Corp, Chairman and CEO Barry Sternich has overseen the firm's growth as a diversified investment company. Today encompasses 4,000 employees. So here's their offices. So here's some other information. So Starwood Capital's hallmark is to invest opportunistically, moving between geographies, asset classes, and positions in the capital stack as the firm perceives risk-return dynamics to be evolving. To execute this strategy, Starwood Capital has built up geographic and asset class expertise in the firm's targeted markets. So we need to figure out their markets too. So one of the world's largest public hotel companies, Starwood Hotels and Resorts, formerly NYSE HOT, since merged with Marriott Hotels. 2 of the biggest commercial mortgage finance companies in the United States, Starwood Property Trust and iStar. One of the largest perpetual non-listed NAV REITs, Starwood Real Estate Income Trust. So there's a few things that these guys have and they bring to the table. So, I'll go over, I could just keep on reading this stuff. So in its pursuit of most compelling opportunities globally, Starwood Capital has invested in more than 30 countries, ranging from the Americas to Europe to Asia, highlighting Starwood Capital's international commitment, ability to shift geographies to capitalize on market dislocations. The firm made strategic decision in 2011 to enhance its long-standing presence in Europe. So let's check out some information on these guys. Here's some of their private transactions. A bank in 2009, TRTX Rescue Financing, Urban Industrial Portfolios. They just discuss a lot of stuff on their website, and they're pretty big. So this is very interesting with these guys, and this is why they're popular. They're big and diverse. Hotel and homes in South Beach. Got some stuff here. Principal hotel company. So they got a lot of things that they bring to the table. But the most important thing is their revenue and their dividend history. I'm going to address this too. These guys are a mortgage-backed real estate investment trust. They're one of the biggest, and their revenue is not bad at all. So 2015, this is in millions US dollars, 735, 2016, 784, 2017, 879, 2018, 1,109, 2019, 1,196, 2020, a little bit of a dip, 1,136, then 2021, 1,170. So there is a huge increase in revenue, and these guys are huge. Remember, they are huge. Let's check out their dividend history. Let's start in 2010. It was 25 cents, then it cracked 33 cents. Then 2011 it was 40 cents. Then 2011 it was 42 cents. And then it was 44 cents in 2011 to 2013. Then 2014 it was just sitting at 48 cents. And it just never hiked its dividend for the past 5 years. That's one thing that's a little bit of a turnoff. The payout ratio is 69%. Now, a lot of dividend investors like these guys. I don't blame them, people that own them. I'm not going to look at you different and say, oh, that's a terrible investment. I like dividend growth. I like, hikes. I like Arbor Realty Trust because they're hiking their dividend. If you watch my previous video, my goal is to get to 400 shares. So check that one out after this video. If you bought one share, you made 192 with the 8.03% dividend yield. Payout ratio is not bad. It's 69%. And again, it's just at 48 cents. So, the industry, it's the top 27, 23.63. Okay. But it has 48 cents. It just hasn't jumped up yet. But people like it. I don't blame them. I mean, this is one equity, trust REIT that I can put money in. I'm just thinking and playing devil's advocate, just thinking the way some investors do it. And some people actually with M1 Finance, I have discussed this with in Twitter Spaces, that they buy NLY or Starwood or Zim or Starbuck or all these other shipping companies, and they have those dividends pay for the other stocks so that they can get other stocks. So that's one strategy that people can do with this. Now, the one thing that's a little bit of a turnoff, like I said, I don't see myself buying this. I'm not too attracted with it. But, in the long run, if I'm starting to rack up a lot of money in dividend income and I just say to myself, okay, these guys hike their dividend and they're sitting at 23.63, which is not too expensive. You're getting 48 cents out. I could buy more dividend stocks in my M1 Finance dividend portfolio. So a lot of people will do that. They'll just get all these passive income from Starwood or NLY or AGNC and just throw it into their other dividend stocks as a strategy. So that's one thing that people can do with that. Let's jump to the next dividend stock, Corp. RC is a symbol. And Starwood STWD was a symbol. I know a lot of people are saying, all right, make sure you tell us a symbol when I'm driving in their car. So the dividend yield is 12.24%. The PE ratio is 6.06. The average volume, 831.47K. The market cap is 1.57 billion US dollars. And I own this one, and I'm not going to confirm if it's a buy and hold forever with me, but I like the way things are going. So the market cap, 1.57 billion. Year range is 1105 to 1656. Day range is 1366, 1390, and its previous close is 1393. So I'll go over these guys real quick. So they're a real estate investment trust that distributes loans, business lending, small business, multifamily, bridge financing, residential, fixed rate lending, CMBS. And I'll go over one thing real quick. Ready Capital is a multi-strategy real estate finance company that originates, acquires, and finances, services small to medium-sized balance and commercial loans. We specialize in loans backed by commercial real estate, including agency, multifamily, investor, and bridge, as well as SBA 7A business loans. Headquartered in NYSE, Ready Capital employs over 600 professionals nationwide. Now let's check out their revenue and their dividend history. 2015, 148, 2016, 137, 2017, 138, 2018, 169, 2019, 229, 2020, 258, and then 2021, 403. So there's a huge increase in revenue from 2015 to 2021, which makes us a very attractive mortgage-backed real estate investment trust. Now let's check out their dividend history. So in 2018, they were 40 cents to 2020. In April, and then July, they had a little bit of a cut. That's kind of go figure. 25 cents to 30 cents in 2020. Then do 35 cents, then to 30 cents. And then they went to like a little bit of a 10 cent. And now they're at 42 cents. So they did hike their dividend. You look down here, from 40 cents in 2018 to 42 cents in 2022. So the dividend growth was, it's a mortgage-backed real estate investment trust. They did get hit hard. The payout ratio is 75%. Number of dividend increases in the last 5 years is 4. So if you bought one share, you made 168 with a 12.06% dividend yield. So again, I like this with the high yield. Now again, high yield dividend stocks are always a huge risk. So if you're willing to take the risk because there could be a dividend cut in the future, go for it. That I'm taking the risk. This is why I bought this one. I like the way the revenue has grown. I like the way these guys have presented themselves. They're at 42 cents. Now, again, I'm not giving financial advice for entertainment purposes only. Disclaimer in the description. I had to repeat that a million times. But there was a dividend hike. So their revenue is going up. See how things go from there. And they're pretty cheap. Like I said, they're in the top 27%, and they're 1373 right now. So I'm really attracted to these guys, and I'm buying more. Let's jump to the final dividend stock. And this is a really popular real estate investment trust. Digital Realty Trust, DLR, is a symbol. And it's not doing too hot against the S&P, which is good if you're a dividend investor. Now, if you have a traditional and or Roth IRA, you're like, ugh. Because my philosophy is you have a traditional and or Roth IRA, you want your price per share to go up and you want your dividends to go up. So you want both. And you want to keep in line with the S&P and or beat the S&P. So the dividend yield, 3.74%, a PE ratio 28.60, average volume 1.43 million, market cap 37.46 billion US dollars. Year range is 119.63 to 178.22. Day range is 129.51 to 131.94. And its previous close was 131.05. So right now, this looks pretty attractive. Let's go over these guys. Wikipedia makes life so much easier sometimes. They sum it up like so easily, and they show the operating areas. This is what I like about these guys. Digital Realty Trust is a real estate investment trust that invests in carrier neutral data centers and provides colocation and peering services. As of December 31st, 2019, the company owned interest in 225 operating data center facilities totaling 34.5 million rentable square feet in the US, Europe, Asia, Canada, and Australia. The company's largest operating areas are Northern Virginia, Dallas, Chicago, New York State, Silicon Valley, and London. Company is a member of the Green Grid and helped pioneer the concepts of energy efficient and energy conserving data center design. So already you're seeing a huge distribution internationally. So these guys are well diversified, and these guys generate a ton of revenue, and I'll show you their dividend growth in a second. And again, data centers are crucial. This is why these guys are in demand. They're generating so much revenue. Check this out in millions US dollars. 2015, 1,763. 2016, 2,142. 2017, 2,457. 2018, 3,046. 2019, 3,209. 2020, 3,903. And 2021, 4,427. So a huge jump from 2015 to 2021. That is how things are nice. That's how things grow. That's how things are beautiful. This is what you want. This is what I'm telling you. This is what it's about. Huge revenue, data centers. Now check out this dividend history. Oh yeah, look at this dividend growth. 73 cents in 2012, 2013, 73 cents. 2013 then to 78 cents, 2014, then 2014 83 cents, 2015 85 cents, 2016 88 cents, 2017 93 cents, 2018 101, 2019 108, 2020 108 to 112, then 2021 116, and then 2022 122. Dividend growth in 5 years is 5.25%. If you bought one share, you made $4.88, a 3.72% dividend yield. Payout ratio is 75%. So again, this one is a beautiful, diversified real estate investment trust. So this one is excellent. The dividend growth is good. The price per share, it's not too pricey. I mean, it's close to the range of IIPR. and it's in the top 27. So dividend investors really capitalize on all three of these. But I'm going to tell you, these guys are number one for sure. RC, I would probably say, is number two, and Starwood is number three. Now, they're all dividend stocks people like. People own them. People use different strategies. Like I said, the Starwood Properties example, I'm using RC to buy other dividend stocks. And, hopefully their dividend growth is ongoing. And DLR is just an amazing stock, dividend stock. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. This is Start Dividend. You guys have a good one.